This near-term lithium producer is one that you will not want to miss. It's called Core Lithium, ticker on the ASX is CXO, and today we're going to provide a fundamental overview of the company and their operations, as well as provide some technical analysis and make some predictions on where we can expect to see Core Lithium go in the near future. Let's get into it. I've partnered with Crypto.com to provide my viewers with an awesome opportunity to accelerate their crypto journey. Crypto.com is used by over 50 million users in 90 countries across the globe and is a leading platform for buying, selling and staking crypto. They also offer metal Visa cards with a huge range of rewards that allow you to convert and withdraw your crypto in fiat currency. Crypto.com is offering a $25 sign-up reward using my affiliate link in the description or by entering affiliate code RyanProven. How's it going, guys? Ryan here and welcome back to another ASX stock analysis video. Today we are taking a look at a company by the ticker of CXO on the ASX. That company is Core Lithium and is soon to be one of the newest producers in the lithium space. Core Lithium will be a hard rock producer, and the reason it excites me so much is because of some of the major players that they have partnered up with from an offtake perspective. These are big Chinese companies and even the likes of Tesla as well. This company has a lot of promise, so I implore you to make sure you have a look at it, and of course watch this video to find out a bit more if you are interested in investing in CXO. And of course, without any further ado, let's jump in to an overview of their company. To kick things off, CXO is a $2 billion company. It holds zero debt at the moment, and as of the 30th of June 2022, it is worth $135 million. Their main flagship project is the Finniss Lithium Project, and it is going to be, as I mentioned, one of the newest lithium mines in Australia. They're planning to launch it in Q4 of this year, so this calendar year 2022, and as I mentioned, really close to Darwin Port, only 88 kilometers away, so very exciting stuff. Obviously still at the moment undergoing their construction phase, and interestingly enough, they are using a process called simple dense media separation, which is low capital intense, and that will basically allow them to reduce their operating costs to $423 a ton US, where we look at the current spot price of the tonnage for lithium, and it is sitting just shy of $7,000 a ton. So really exciting stuff there. But what does excite me more is some of the agreements that they have in place. They have two binding offtake agreements in place. The first with Ganfeng Lithium. This is a 4-year period and it is for 300,000 tons of product. They also have another one with another Chinese company called Yahua, and this is for 4 years and again 300,000 tons. Now they do have a binding term sheet also signed with Tesla, and this is once again for 4 years, but it is up to 110,000 tons. Interestingly enough, those first two I mentioned, Ganfeng and Yahua, are also holders within the company. Ganfeng currently holds roughly 5% and Yahua holds about 4%. Now, that is a very positive thing to see when we're looking at companies like this, because it shows that they have a financial interest in the success of CXO. 20% of the holders as well are institutions, so you've got really solid ground there, and interest obviously from those really big players that we're going to see obviously be a massive driving factor moving forward. Now let's talk about the resource itself. They have a mineral resource estimate of 18.9 million tons at 1.3% and an ore reserve estimate at 10.6 million tons, which is at a value as well of 1.3%. Now this is obviously some very high grade lithium, and they have a lot of it. The key here is people want to see that battery grade lithium, and the higher values you're seeing, the better and the more money you are going to be able to obtain from it. And hopefully we're also going to be able to see this grow as well. The company is currently allocated $15 million to their exploration budget, and that will also include extension drilling at 2 other sites, BP33 and Carlton. Very, very interesting there. And as well, on BP33, they are determining if a second lithium mine is feasible. Their final investment decision will be in the second half of this year as well, 2022. So some big things coming out in the near future. As you can see, not only is this company going to start producing very, very soon, there are some other big catalysts that are on the way which will really drive up the value of CXO. I implore you, please have a look at this stock. It is certainly not one that you want to miss. But now we're going to take a look at the chart, perform some technical analysis, and try and make some predictions on where we can expect to see CXO go in the near future. So without further ado, let's jump into it. Welcome into the CXO chart, guys. As you can see, we're currently sitting at a value of $1.10, but we recently hit an all-time high on the 13th of September, and that was $1.68.5. So we have taken a bit of a tumble, as you can see, particularly in the last 3 days, but the overall market has been taking a massive hit, which is, in my opinion, the key driving factor for the decrease in price, particularly to this level. But one thing that is noticeable is that 200-day moving average, currently sitting at a value of $1.08.9, is acting as a major point of support, and you can see historically as well, it has acted as that for us. So as long as that maintains itself, the upwards trend that we have seen over the past couple of years should maintain itself. You can see that this stock has had some amazing gains. Back in 2020 November, this was sitting at 5 cents, so it has expanded greatly off the back of the lithium market going nuts. So what else can we take a look at? Well, the one thing that really concerns me off the bat is that 20-day moving average moving very sharply downwards towards the 50-day. Ideally, we don't want to see a cross of that 20 below the 50, but it is moving fast. So unless we see a big bounce in, I suppose, the price action, we will probably see a bit of at least sideways action coming up in the next few weeks. But of course, there is the possibility for this stock to bounce. We have seen as well big decreases, I suppose, or increases rather, in sales volume coming out. That is the market panic overall and a driving factor for, once again, that decrease in valuation. So what can we do first off the bat? Well, I think it's quite clear that we need to put in place some horizontal points of support and resistance. So first and foremost, where is our key points of support? Right now, I think that $1 and I suppose 10-cent mark is just above one of the key points at the moment. $1.06.5 is probably realistically where it is at right now. So I'm going to put that in place. You can see this has acted as a key bounce point historically as well for us, and of course a key breakout point in many instances as well. That is our key point of support. If this does fail, where would we typically end up? I'd suggest probably just about here at the 82-cent mark, which is where we dropped all the way down to historically. So what else is noticeable off the bat? Well, I think something that's quite interesting, and I think a lot of people would miss, is right here there is what appears to be a very, very small gap. Now, the low of the 23rd of September was $1.34.5, and the 26th of September high was $1.33.5. So there is a very small gap there that needs to be filled at some point, which is interesting. There was another gap over here which has been filled now, so that is obviously clear. Now, if we were able to, I suppose, break out and close that gap, what's the target? Well, of course, that all-time high would be our first key target in my opinion. As you can see, lots of points of resistance have been encountered here. We haven't been able to get above that ceiling into the $70s, but I think that is going to come very, very soon, just based on all the fundamentals that are going for this company and their near-term revenue flow that will come as well. Let's have a look at a few other indicators. First and foremost, RSI. And the RSI, as you can see, has gone basically within the space of a couple of weeks from the overbought range, just cracking that 70 mark at 70.25, all the way down to where we are today, 29.83. This is now oversold. So the fact that we've managed to land on two key points of support, the 200-day moving average and our horizontal support point at $1.06, is the perfect setup right now for a bounce. Very, very good in that perspective. MACD, let's have a look at this one as well. You can see that is plunging as you would expect. We had a cross of that 12-day EMA below the 26-day EMA on the 16th of September, as you would expect to see when we have hit a ceiling and bounced off it and then started moving down towards, of course, that 20-day. Now, it has crossed, another technical factor contributing probably to a bit of a sell-off, people taking profits really, really quickly, especially given the overall market segment. No real idea if this is going to turn soon. If we do see a bounce, we should start to see that 12-day EMA swoop up, but we have not necessarily hit our peak yet. The key here are for our key support points around here to hold up and of course see an increase in value. Otherwise, this sell-off could be big down to that 82-cent mark. What else are we able to look at? Well, I think we could probably put some Fibonacci levels in place. So if I go from here all the way up to our peak, which is over here, I'll just expand it out so we can see a bit more. You can see that a real, I suppose, point of contention from a price action point of view was that 0.382 mark. You can see that our bottom point over here is where I've basically put our next level of support. But from a Fibonacci point of view, we could possibly go all the way down over here to $1.05 before we see a bounce. So if that does fail, I would expect to hopefully see some sort of, I suppose, support hold up in that sense as well. Overall though, the chart isn't looking too bad, and when you take in the fundamental factors of this stock, you can really see that it is a stock which is long-term going to be able to shoot up in value. I mean, realistically, you could probably even take a point from over here and start to put in place some sort of an upwards trend. Maybe a bit like that, I don't know, but hopefully in the next few weeks we will see some clear direction on where we're going. Market volatility at the moment makes things very, very hard to tell, but just keep an eye on those key points of support going forward. And of course, ideally a cross in the future of the MACD upwards, showing a shift in momentum. What is my price prediction then for this stock? Well, given it's looking like the overall market's suffering, if this support point drops, the dollar mark, the $1.05 mark, is probably going to be touched, purely given the fact that that is a Fibonacci point. Now, ideally, I'd hope it holds up there and bounces, of course, but worst case, 82 cents. If we are able to manage to bounce up off this key point here, we will see, ideally, 50-day moving average being the near to, I suppose, short-term target. That's currently sitting at $1.34.6. So that's probably the immediate goal for us, to bounce off this horizontal point of support and move back upwards in a decisive manner. That wraps up today's analysis of ASX stock CXO Core Lithium. I'd love to hear your thoughts down in the comments section below. Of course, if you did enjoy today's video as well, make sure you do leave a thumbs up. And if you want to see more of this sort of content, hit subscribe and turn on those bell notifications. I'll leave it there for today, guys. I hope you have an awesome day. I'll see you next time. Cheers.